After 5 years of creating, market testing, and pivoting, the founders of D3 have refined the formula for growth hacking the small to medium business market for phone and unified communication services. D3's financial model can deliver investors a return of their investment by 2022 and an exit anytime thereafter at 3 times revenue or 12 times EBITDA. In 2017 and 18, D3 raised $750,000 in Series A funding, and we grew our customer base over 300% in just the last 4 quarters. We are continuing our national expansion and seeking $500,000 in additional follow-on Series A funding. For those not familiar with D3, we are a 2-tier model. D3 provides a white-label cloud-based phone and unified communication service to the technology companies supporting small and medium businesses. These technology companies are known as managed service providers, or MSPs, and they sell our service under their brand. I'll talk more about the significance of our market opportunity in a moment, but first I want to highlight one of our key differentiators. White labeling is a key reason MSPs choose D3 as their partner. D3 helps MSPs replace this picture with this, a cloud-based phone and unified communication service that MSPs sell under their own name. Now back to the numbers. D3 focuses on the S in SMB, but our market opportunity is anything but small. D3 targets managed service providers because 5.7 million small businesses depend on MSPs for most of their technology services. 98% of all U.S. businesses are considered small because they have less than 100 employees. Assuming 1 communication device per employee, this gives D3 access to a market with an estimated 40 million devices. So, if the S in the SMB market contains over 40 million devices, how many devices does D3 need to become profitable? 5,000. What percent of the S market does D3 need to achieve profitability? 13 thousandths of 1%. Moreover, D3 needs less than 0.2% of the market to achieve all of our 5-year financial projections. We currently find MSP suspects through a process driven by email and touch over 1,000 MSPs per week. They become prospects after requesting more information, setting up a call, or scheduling a demo. We have a 75% closure rate when MSPs agree to a demo and see the portal and the tools D3 has developed exclusively for them. Once signed, we nurture our MSPs through a 90-day onboarding process that prepares them to market, sell, install, and support their new phone and unified communication service. At the end of 2017, D3 had 14 MSPs in 7 states. By the end of 2018, D3 had grown 300% to 59 MSPs in 22 states. And in the first quarter of this year, D3 added 20 new MSPs and 5 new states. In 2016 and 17, D3 focused on refining our MSP target persona and perfecting the best methods for finding and signing them. After joining D3, MSPs go through an onboarding and training process. Many start adding their customers, small to medium businesses, in 3 to 6 months. As the number of MSPs grow, each one continues to add new customers and devices. As the number of devices increase, revenues increase in unison because of monthly billing. What are the reasons investors choose D3? Well, we have a proven formula. We use MSPs to growth hack their existing customer base. We're experienced and qualified, over 4 decades and a proven track record. We have a SaaS model. We provide phone and UC communication services, and we have the much desired long-term monthly recurring revenues. Our key differentiator is white labeling. Our market opportunity is not small, 5.7 million businesses with over 40 million devices. We know how to pivot, and every year we get bigger and better. We don't need any patents or FDA approval. We just need to ring phones every day. We have multiple data centers, so there's no limitation on our growth. And we offer an early investor reward. The first 400,000 investments receive a price discount. And lastly, attractive returns in 4 years, 3 times revenues or 12 times EBITDA. We know we're not a bright, shiny object, but the evaluation analysis that follows will show you that we are a diamond in the rough. For our valuation analysis, we have selected the Quorum Group as our industry information source for the following reasons. The Quorum Group focuses on selling technology and software companies like D3UC. They have 30 years experience and have closed over 300 transactions worldwide. The references for the Quorum research used in this valuation are provided at the bottom of each slide. Annually, Quorum publishes their Top 10 Disruptive Technology Trends report. Quorum places companies like D3UC in the Focused IT Service Providers category. Focused IT service companies have been on Quorum's top 10 list for the last 4 years. What are the key factors that drive the valuation ranges for focused IT service providers? First and foremost, monthly recurring revenue from software as a service, deep industry experience, specialized knowledge, disruptive technologies, and applicability to multiple vertical applications. Quality of revenue is the key factor that drives higher valuations. If you have unpredictable break-fix service revenues, that leads to a lower valuation. However, predictable cloud-based software as a service revenues lead to higher valuations. D3's business model contains all of the key factors buyers look for in focused IT service companies. D3 ranks high in quality of service revenues because we are a cloud-based SaaS solution with predictable monthly recurring revenues. The combination of both key factors and high-quality revenues places D3 at the pinnacle of the valuation range. So what are the valuation ranges Quorum gives for focused IT service providers? Well, 1.5 to 4.5 times revenue or 11 to 13 times EBITDA. Between 2020 and 2022, D3 forecasts revenues and EBITDA of approximately $19 million and $7 million. D3 plans to distribute profits to investors as a return of investment until we achieve a successful exit. Using the midpoint of the Quorum valuation ranges, D3 will exit at a multiple of 3 times revenue or 12 times EBITDA. A $25,000 investment in 2019 could return between $277,000 and $484,000 in 2022, or a multiple of 11 to 19 times. As part of our initial $750,000 Series A funding round, D3 received a $250,000 investment from the Rowan Innovation Venture Fund after a thorough and detailed due diligence process. D3 launched a $500,000 Series A follow-on round this past January, and we received $200,000 from our existing Series A investors, including the Rowan Innovation Venture Fund. We have $300K available for new investors, and we're offering a price discount on the first $400,000 raised. The minimum investment is $25,000. I want to thank you for listening to my investor presentation. I can be contacted at the telephone number and email on the screen, and I look forward to hearing from you. Thank you.